Hello, everyone. This is your host, Akeel Jabber, and welcome back to another episode of SaaS District. In today's episode, we'll be talking about how the current micro SaaS acquisition environment looks like for startups under 500K in ARR. Today, we have our guest, Andrew Gazdecki, joining us. Andrew is a storyteller and an entrepreneur. He started his first company, Business Apps, while still in college, which was an affordable mobile app development platform for small businesses. He initially raised around $100,000 in funding, and by the time the company was acquired by a private equity firm, they had grown to $10 million in ARR, operating in 40 countries and employing over 100 people. His second business, altcoin.io, was a decentralized exchange for trading digital assets. By trading on their decentralized, non-custodial platform, traders could protect their assets. Altcoin became a champion of security in a market dominated by custodial platforms that put users' funds at risk. They were eventually led to the company eventually led to a company being acquired by a global investment firm called BNK to the Future. So welcome, Andrew. Glad to have you on our show today. Hopefully that was a good introduction.
That was good,
That's good.
Akeel. Thanks for having me. Big fan of what you guys are doing over there at HoriZen. So this is gonna be fun.
Yeah, awesome. So we do have to give a quick shout out to Nathan Latka. So he introduced us indirectly, and I'm pretty sure we'll do something together. And you send some deals to us. So if you guys don't know Nathan Latka, check him out. We did a video together last week on his SaaS deal or bust on his YouTube channel. So if you guys are listening, check that out.
That was fun.
Yeah. So Andrew, tell us a little bit about your story. I want to hear that first business you built in college, Business Apps in 2010. Tell me about the story. What happened there? How did that idea form, and how'd you get to where you were today?
Man, how much time we got? So yeah, I'm kind of like so to just kind of like kick things off. I'm a diehard entrepreneur. I was that kid, you know, 10 years old. I had like an eBay store, maybe like 12. I used to sell like Pokemon cards. This is kind of embarrassing, but I had like a World of Warcraft website that sold like digital gold when I was like 17 or 18 or something like that. So I had this thing where I was always trying to start a new company every summer. So I went to CSU Chico State, started a company called Phone Freelancer. This is how Business App started. So it was a simple job board that connected businesses with mobile developers. Remember when the iPhone like first came out and everyone was like, how do you build apps for this? Like this is like revolutionary. Do you remember those moments?
I remember, yeah, first iPhone.
And so, I saw that kind of as like a paradigm shift, and we could talk about this, but I always view the best businesses that you can build are ones that, have kind of tailwinds, market shifts. And so I knew there was opportunity there. So long story short, created a job board that connected mobile developers with businesses. Just bought like a freelancer.com script. I'm a non-technical founder. Got some design chops. I can do HTML. Most of my background and expertise is in go-to-market, sales, marketing, operations, culture, jokes. I don't know. But so that company, it wasn't really a company, but I sold it in college for an amount that felt like $1 trillion, because everyone's broke in college. Yeah. But the reason I sold it was I kept seeing people posting the same sort of listings. They said, hey, I'm a restaurant. I want to, build an app that does these 5 features, and then they would pay a developer like $50K to develop it. So exactly. I thought, all right, well, let's sell this thing, and then I'll have seed money to create a template, kind of like Wix or like, Weebly, but for like mobile apps. And we eventually expanded into progressive web apps, Android apps, and some other cool stuff. But yeah, started at very humble beginnings. I was just a kid in college. Candidly, my motivation is I wanted to, get rich. Over time, motivations change, but when you're young and you don't come up from a lot of money, that was kind of my drive. And so I knew I wanted to start a company, and I did. So yeah, Business Apps launched in 2010. I was 21 at the time. Raised about 100K, and What's interesting about business apps that a lot of people don't understand is so when you look at like the website, it's still up. It looks like it's for like SMBs, right?
Yeah. Yeah.
So when we first started, we were like cold calling all these small businesses, and we call
Mhm.
restaurants, be like, hey, like, are you interested in like mobile app? Like, what are you doing for your mobile marketing? And be like, appetizer? Like, what are you talking about? So struggled with that for a while. And if you build, the best businesses, you want to have like, an LTV above like 10K, 20K, mid market. Big fan of those businesses these days after
Mhm.
learning through MicroAcquire, or not
Mhm.
MicroAcquire, business apps. So what we did was uh, really just talk to customers. I saw one customer building like 5 apps for these big Ramada hotels in Switzerland. And I'm thinking, okay, there's this like really rich person on business apps, like building apps for these hotels that he owns. This is cool. And again, I'm 21, so I'm like, I want to talk to a rich guy. Called him up. He's in Switzerland. I'll never forget it. And I just asked him like, hey, thanks for building these apps on my platform. How can I help you build more? And so that's when like the huge light bulb went off, and this is when the basically the trajectory of business apps changed forever. And what he explained to me was he was a marketing company, an agency. So
Mhm.
he's working with these hotels, and he told me that if I could white label the software, this amazing mobile app building software that we built, he could then sell this as like a semi-custom solution to the 100 hotels and hospitality companies he was working with.
Mhm.
And I remember Wikipediaing like, what does white label mean? Like I had
Mhm.
no idea. And that was really the business apps model, and that's how we were able to bootstrap it. So instead of focusing on one small business at a time, we ended up partnering with, at its peak, about 5,000 web agencies all across the world. We were in 40 different countries, translated the app, more languages than I can't even remember. Some interesting ones like Hebrew. It's like right to left. Didn't know that. Also didn't know that Portuguese or Brazilian Portuguese is different from Portuguese in Portugal. That
Right.
was that was an interesting situation because we had a big client in Brazil. We did Portugal Portuguese. Um, so yeah, man. Just started it. Really, the goal was to just not get a job. I thought, hey, I'll build like 20 apps for these businesses in my college town, which I did,
Mhm.
and I don't have to get a job. Cool. And then we stumbled onto something a little bit bigger, and it just kind of scaled up from there.
Yeah, I usually hear there's kind of two types of entrepreneurs that I run to. One are the ones who are like, I just know I'm an entrepreneur. Like, doesn't matter. When I was a teenager, I was trying different things, and you just keep having to do something and build something new. And then there's ones who are like, I just kind of stumbled into this problem, and somebody said they want to buy it. And I said, hey, maybe I can monetize it. But it was just like, and then it ends up doing well because they're solving a really good problem. But yeah, I think me and you are pretty similar on that side.
Yeah, I mean,
Have to keep going.
there's no like right path.
Sure.
I think the key is just you know just having fun. Really understanding yourself. And yeah, like when you're motivated and you're passionate about something, startups are hard. I know you know that. You buy them. That's like the hardest thing. But that helps you through the ups and downs because business apps wasn't always just like, oh, this is so easy. Like we had so many moments where it was up and down. But
Sure.
yeah, either entrepreneur, if you're passionate about it, you're gonna do well.
Yeah, it's funny you say that story about the job board. Actually, I remember when I was in college, I did the same. I actually started like a recruitment company for tech startups, and I was helping them kind of recruit all these people. So I did that. It did really well. Built at least like 10K MRR for in college. That's a lot of money.
That's a ton of
Uh,
money. That's like $1
that's
trillion, dude. That's
right,
how I felt. I was like, this is like a billion. Everyone's broke.
right. I
So
felt the richest kid at school, but yeah.
yeah, right on.
But yeah, I didn't do anything as interesting as you. I just like shut it down. I mean, I didn't know anything. Looking back now, I didn't know SFPs, how to hire, how to do systems and automate. Now it would have been done much better. But it's okay. Cold calling and making sales. That's a experience you'll never forget, right?
I think it all worked out for you.
Yeah, yeah. Where did you spend that money? So you actually went out and raised the 100K. Did you end up raising any more, or was that it?
That
It
was
was good.
it. So business apps as a model was so cost effective, or efficient in terms of how we spent cash. Um, we kind of did the Silicon Valley thing too, which is interesting.
Mm, mm,
We were named to Inc. magazine's fastest growing companies twice. We stopped reporting numbers because people were looking at our business really closely after that. And a fun fact, if you get on Inc. 500, like you have to change your cell phone. Like
okay.
every recruitment company, everyone calls you.
Wow.
So what we did was, um, we have 100,000 cash. Like you can't really hire too many people. So we focused on innovating on distribution as much as the product.
Mm,
That's what I was always telling my team. Like, hey, we have a great product. We need to find a cost-effective way to distribute this product, and the white label channel proved to be that model. And
mm,
so we kind of went all in on that model. And the unit economics were great. We had customer payback within 30 days. So within 30 days of a partner coming on, we were profitable off that, could reinvest that back into the business. We also did a lot of, larger deals with agencies where we do a discount if they paid annual upfront.
mm,
So it was like a mid-market company,
mm.
but just customers coming in paid for, the company to grow. So to answer your question, like 100K, what did I spend it on? Barely anything. Like
Yeah.
I always say, the best source of funding is customers, and so
Mm, agree.
we just found a way to bring in customers very cost effectively. And then you might be thinking, okay, how do you find all these people? How do you get 5,000 partners or whatever? And we focused heavily on brand and storytelling and PR. So if you look at business apps, and press mentions, we were in TechCrunch like 10 times. I like built relationships with all the writers. Anytime we had a product release, I made sure to pitch them. And even if they said no, it still kept them in the loop on what we were doing. Milestones, like we reached 500,000 apps built. You know, we even did something where we were giving away free app accounts for students. So we focused heavily on
Cool.
brand,
Mm,
and that's something that I think a lot of startups should do. Just establishing yourself as the market leader. People hear about you the most anytime in our market. If you looked anywhere online related to mobile marketing, even today, like
mm.
if you look on G2 Crowd, even 2 years later after I've sold the company, we're still like the market leader.
Interesting.
Um, so just focusing on brand is what I did. Just these marketing strategies that just didn't have any costs to them,
Mm.
and it worked out, man.
Cool. And then 8 years later, 10 million ARR. What was the decision at that time to exit the business versus continuing to grow? Did that private equity firm just come up to you and sounded like a good offer, or were you guys like, all right, I'm kind of tired of this and looking for a buyer at that point?
Yeah, funny enough. So I hired an investment bank in
Mm.
2016, and again, I'm like 26, man.
Yeah.
So if you ever want to do a podcast again on all the mistakes you could possibly make running a SaaS company, that I could run an hour on that. So
Okay.
I hired an investment bank, won't say which one. Got a few interesting offers, earnouts, had to move part of the team to a certain state where they're headquartered. We had one really large private equity firm looking to do like a 30% or a 70% buyout. But I turned them down.
Mm.
I'm sure you run into founders that are always kind of debating, should I sell now or should I keep going? And I was young and the market was still growing. So I just said, hey, let's keep going. So funny story, 2 years later, the one of the PE firms that the investment bank introduced me to, we ended up selling to them, and
Mm.
they reached out to me. Um, Ended up selling to an individual named Andy Treba, amazing dude. I still keep in touch with him to this day. I look up to the guy, and working with them, and I think this is probably similar to the terms that you give founders was, I was getting tired. I was running the business for like 8 years. I had already started working on another company. Um, and it was a good business. It was profitable from, pretty much year one. Turned down VCs like earlier when I was like 23, 24, 25, kept it bootstrapped. Um, and yeah, so I just kind of got tired, and candidly, I got an offer where, hey, if I take this, I don't really have to worry about finances ever
Sure.
again in my life. So that was obviously appealing.
Mm.
And the terms were great. It was, I don't know if I can really say the terms, but they're similar to yours. There's things that they did that just really, you know, incentivized me to do the deal. We had about 2 million cash on hand. They bought that.
Okay.
It was a stock purchase, so the tax liabilities were super low,
Cool.
um, and quick transition out, really straightforward due diligence. ESW Capital has a stellar reputation for, when you sign the LOI, that's basically, what to expect going through the process. So it was just time. It was time to
Mm.
move on. I had
Mm.
learned so much, mostly through mistakes. Um, Happy to talk about those if you want, but
Sure.
yeah, I mean, long-winded answer, but I just wanted to move on. I wanted to, I like building companies. I feel like I built business apps to a spot where it was in a good place for a potential sale. And
Hmm. You got a good offer you couldn't refuse. Yeah, that's kind of our sweet spot. Most people think we look at early stage or like 2 3 years old, but it's actually around that 5 6 7 year mark. I think you were 8 years where the founders kind of burnt out. They're just like they've kind of hit the plateau of where they want to take it and they want to move on, and we're just like, okay, cool, we'll come in and keep growing it for you, right? And making
yeah,
cash
eight
out.
year 8 years in startup land, it's like 50 years,
Yeah,
like
exactly.
a long time. So
That's true.
it worked out, and I couldn't be happier. So
Cool. And looking back now, so a couple of years now in the since that happened, do you think it was the right time and right decision at the time to exit?
I mean, now that I know, I mean, so every founder, when you sell a company, it's your first time.
Mm-hmm.
So you don't really know, like, what other options you could do. If I can go back, I wouldn't change a thing.
Okay.
But now knowing kind of like the PE landscape and how to, potentially position my company better for other private equity firms, um, maybe I would have ran like a process where, I brought a few more buyers to the table, but
Mm-hmm.
again, it was just an offer I couldn't refuse. I just said, "Hey, let's go, let's do this." But
Mm.
um, no, it worked out so well that um, that's a really good question, and I'm kind of debating my answer right now, but
Yeah.
I'm gonna go with no. I wouldn't change a thing.
Okay. No regrets. That's good. That's a good answer. And then from there, you went and built another company, Altcoin, and then had an acquisition exit within like another year or so. Was it Bank to the Future?
Yeah, so I had two acquisitions in a year, which was
Jeez.
kind of cool.
Yeah.
So I think one interesting thing that happens when you sell a company is you learn how to build a company with the purpose of getting it acquired. And so
Mm-hmm.
that was the idea with Altcoin. And it was when like, Bitcoin was going crazy. I kind of fell into that hole a little deeper than others.
Mm-hmm.
We ended up building some pretty interesting technology, and then just sold that to someone who could take it farther than I could.
Cool.
And also, candidly, I'm a SaaS person, so I realized I didn't want to be in that industry. I do, think that whole space is interesting, but a little early.
Mm-hmm.
Um, so for 1 year, it was a good ride, and yeah, and then candidly too, what's interesting when you sell a company too, you're kind of like, what do I do next? And
Mm.
so I immediately rolled into that company, and that one also worked out pretty well.
Yeah, just that's what when I was at the previous firm I was working at before. When I left, that's kind of what happened. It was around the same time period where they kind of all the partners were getting excited about all this, crypto. world. And I kind of stepped back. I saw the opportunity, but I did see it was kind of early. So that's when I decided to build HoriZen. And they did make a lot of money with it, but it just wasn't for me, right? I'd rather focus on what I enjoy, right? So
It's a
yeah,
tough market to make
yeah,
anything work. Like I think that market has a few years to go.
yeah,
But we were still able to make a couple breakthroughs that were, fairly valuable.
mm,
And I love technology. I love digging in on like stuff that is
yeah,
over my head, which it
mm,
probably was to some extent.
mm,
Um, and again, worked with, I view startups as like, these journeys where you get to bring together awesome people that, you're going to be friends with for life, and got to do that again. And,
mm, yeah.
hopefully I'll do that again in the future.
And then I think you're now like 28, 29. You finally get your first job as at Spiff, where you're like conversion. Was it chief revenue officer? You
Yeah.
helped them.
So,
Yeah, what happened there?
yeah. So since you're not an employer, I'll tell you my age.
Sure.
I'm just kidding. So I sold business apps when I was 29.
Mm,
Allcoin was acquired when I was 30.
cool.
Joined Spiff when I was 31. And the story there was I was originally going to be an advisor. So
Mm,
talked with Jaron, the CEO, one of the most brilliant product developers I have ever met. One of the best CEOs. Um, I consider the guy like one of my like really, really good friends. That whole team is amazing. And so it started off with me just kind of like, taking calls, giving some advice on how I do things. And they had just let their prior CRO go. And so they needed some help on just the general go-to-market strategy as a whole, like the sales process needed redoing. They had a good baseline of customers, but they had no what I call unaffiliated customers. So all their
mm,
customers were essentially referrals from people that they knew,
mm,
their board members, stuff like that.
right.
So came in there, optimized the sales process pretty quickly. Didn't do anything magical, but ended up growing the company about 1,000%. Got them into TechCrunch, Forbes, helped them with their brand, their storytelling, their positioning. Had an absolute blast. Ended up raising a 10 million Series A. Um, and then I just kind of felt, my job was done. I helped them recruit a world class replacement for me, who's way smarter than I am. So I'm really excited for them there. But yeah, being an entrepreneur, I felt like I helped them win like the first championship, and now they got to go do the three more, dynasty
Mm,
type play. So they're doing the Series B, Series C thing, and
cool.
I'm an entrepreneur, so yeah, back in entrepreneur land, I guess you could say.
Yeah, yeah. So back to today, 2020, you now decide to build your next company, which is MicroAcquire, where you help companies, other SaaS founders, sell their business without a broker in between. What's your vision with that platform? And if you're not charging intermediary brokerage fees, how are you planning to monetize that? Or if I'm missing
Yeah, that's a
something?
good question. If you have any ideas, let me know. I kind of what I did was I just basically wrote down all the things that I want in the next company that I start.
Mm,
Love working with startups. Love meeting interesting people like yourself, um, and just helping startups think through like how do companies get acquired? How do they get valued? What do buyers look at? What is due diligence? Like what should I expect? And I'm not super hands-on with this stuff because again, I'm not a broker. I don't take like any sort of fee. But the way I kind of view it is, you have brokers in the market. I'm sure
mm,
you work with a ton.
mm,
And then, a lot of, some of the best companies that you can acquire are usually like, the diamonds in the rough where you got to go find them, cold email, just keep relationship with them. I view MicroAcquire kind of as a middle ground
mm,
where, the founders are able to, speak with buyers directly. They're not committing to anything. There's no commissions on either side. So that's kind of the vision for it is, there definitely is a purpose for, brokers, investment bankers, 100%.
mm,
But then there's a lot of startups that, are comfortable meeting buyers directly. And so that's kind of like the void in the market I'm trying to fill. And candidly, even before I joined Spiff, I was looking to buy a company, and
Mm,
so I didn't know about any of the brokers. I knew about all the investment bankers, but not
mm,
I did not know that world existed.
okay.
I didn't know there was these websites that sold these like micro SaaS companies. And so I just thought, hey, like it'd be really cool if I can kind of cut these people out and speak with founders directly. And so I just kind of scratched my own itch and just built it. I can't believe people use it, to be honest.
I guess it's also good for deal flow for yourself too, right? A good way to get your own deals and get first crack at some of those startups.
Yeah, funny story. So, I put out an LOI on a company that I loved.
Mm,
I won't say the company, but
sure.
every company that goes on MicroAcquire, I put it on the marketplace. I don't do
Mm,
anything where like I get first look and then I'm like, hey, like you got to
mm,
take my deal or anything like that. So he goes on the marketplace, gets like 50 requests from potential buyers, weeds it down to like 10 people, gets it down to like 5 LOIs. And then I'm like, do you mind if I submit an LOI? And there was one at the top that was priced over what I was expecting was real.
mm,
So I was the second highest bidder, and I was really excited about that company. Still friends with the founders,
mm-hmm.
and obviously they took the higher price.
Sure.
And so my payment for basically shooting myself in the foot on that deal is I'm expecting a bottle of wine from France in the mail anytime. So that's what I get.
Nice. So you still haven't figured out how to monetize it yet, right? But just building it up right now and see how dominate and then monetize kind of model.
Yeah, I'm really just focused on trying to, you know, really solidify MicroAcquire as like the go-to place to buy and sell micro SaaS companies.
Mm,
There's still a lot of work to do. I'm still figuring a lot of stuff out. But there's a wide array of buyers in there, which is really cool. There's like, people that are looking for things on the smaller end. It's called like pre-revenue 10K, like just
mm,
hobby things. And there's the 100 to 500K. That's like where I envision the whole platform to be perfect for it, and I still do. But now we're starting to see larger companies coming in interested in just meeting with buyers, feeling out the market. um, so yeah.
interesting. I feel like that 100 to 500K is probably a lot larger buyer pool there, and I feel like somebody with some bit of cash can pull that off versus when you get to the higher range, you need a lot more capital to back you. I think, right? So
Yeah, that's
yeah,
when I come to you, because it's a better
yeah,
experience for everybody, because
true.
not a lot of people have a couple $1 million to just do a SaaS acquisition. And then you know my experience selling business apps, I sold to a buyer that had a great reputation. I knew what to expect. So if a founder comes onto MicroAcquire and it's clearly probably too big for 99% of the people on the market,
Hmm.
happy to make introductions and just point them in the right direction of firms that
Cool.
are reputable buyers in the space. But yeah, the majority of deals that go really fast on MicroAcquire are between 50K MRR, or
Mm.
not MRR, ARR, up to 500. That's the sweet spot that I see a lot of interest in, which is really cool.
Mm. And how do you kind of streamline that selling process? Because you've obviously been through it. Buyers need a lot of, enough information to be comfortable acquiring the company. How do you make sure that the seller provides that and still efficient for you and your team, and it's not taking about a bunch of your time?
Yeah, definitely. So I try to talk to every founder. Now
Mm.
that I'm able to do this full time, I spend the majority of my day just talking with founders, trying to set expectations correctly. Sometimes it's harder, easier said than done. It can be hard to tell someone like, "Hey, your baby isn't as good looking as you think." It's probably not worth like 10x top line ARR. Like, so I run into that sometimes, and then I'll try to just tell them what to expect. But the cool thing about MicroAcquire is you can connect your Stripe metrics, Chart Mobile, Bear metrics, Profit Well, so you can get real financial metrics that you can view about the startup from their MRR, ARR, LTV. So that's one way I'm trying to streamline due diligence, where you don't have to go through like a P&L before You even get excited about the business. You can see real financial data being shared, obviously anonymized,
Hmm.
but that's kind of like the way I'm looking to streamline the due diligence process for the buyers, but then also give them some confidence. Like, okay, these are your true revenue metrics because we're pulling the information directly from whatever billing system that they use.
And are you providing them like a range of how they should be pricing it, or they can price whatever they like and see what kind of bites out there?
Yeah, so
That's tough.
two things usually happen. I've written about valuations and what to expect. But again, some founders will go on there and say, hey, listen, I spent like 300K making this, so I need to sell for like 500K, but it's making like 50K. And it's like okay, but this is the market multiples that I tend to see go pretty quickly. And I usually will just in those scenarios, rather than saying like, hey, you can't be listed, sometimes if it's just completely ridiculous and it doesn't make any
Mhm.
sense, then I don't approve it onto the marketplace.
Mm.
But I think it's a good way for founders to let the market tell them what their startup is worth rather than me. So I
Mm.
think that's the most powerful way of, these are real buyers. They are really interested in acquiring your startup, but not at this price. And then they're able to justify their valuation at this level. So I do a little bit. I say, hey, these are the ranges that I recommend.
Mm.
But it is up to the founder. Again, the whole purpose of MicroAcquire is just to connect, sellers with buyers. They want to price it on the moon. That's fine. I do not recommend that. And
Mm.
again, if it's that high, I'll kind of like tell them this isn't going to work. Um, but generally, I'll give guidance, but it is up to the founder entirely.
Cool. Yeah, that's probably I'd say the number one reason we probably have to turn down. Like we have a good conversation and they're maybe kind of interested to see what they can get. But yeah, it's always like their valuation expectation. I don't know. They always want a 10x. It's always 10x versus somehow the calculation ends up being that. And it's hard to justify. So, I mean,
Yeah, I think the public markets and just like venture-backed businesses have kind of put that thought into founders' heads that, if you have 50K ARR, we'll multiply that by 10. That's what your business goes for.
exactly.
But when you're looking to get acquired, buyers, will value your business much differently.
Yeah.
Whether that's a strategic buyer or a financial buyer. So yeah, I definitely hear you there.
What's like the minimum amount of information that you need to provide to the buyers you're seeing right now that they're able to make a decision and buy, other than you just connecting to their account, verifying their payment, and that's enough, or what else are you giving them?
I have like a questionnaire that I usually have sellers answer, just like what is, trailing 12 months revenue, what was profit, what's involved in operations, how much time are you spending on support, who's updating the code base, just general high level questions that, I think every buyer will want to ask.
Mm-hmm.
Like, have you raised any venture capital? Is there any debt on the companies? What are the liabilities? Do you have a P&L available? If they have all that information, great. But that's kind of the bar that I try to implement on MicroAcquire.
Mm-hmm.
But it is on the buyer to do all the due diligence, verify all this information.
Sure.
Um, because again, I'm not brokering these deals, so I'm not like, hey, this is like all the information I've done. I just kind of help sellers understand these are the typical questions that buyers are going to ask.
Mm-hmm.
So let's get these, formatted. Let's put it in like a presentation. And again, it's also anonymous too. So when you go into MicroAcquire, sellers can, approve or deny access to their private details, and that would include the revenue metrics or any sort of like P&L or company presentation that they upload.
Mm-hmm.
But those are generally the high level requirements. Is like you got to give a buyer enough information to understand the business, what does it take to operate. Do you have like your numbers even close together? Like how organized is the business? But I'm also still working on streamlining that part as well. So I've gotten a ton of feedback on how to make that better, which
Cool.
um, I'm going to be implementing soon. I'm excited about that.
Why did you decide to focus only on that, less than 500K ARR? I know you are getting some different deals now, bigger deals, but what was the reasoning? Because, it's a smaller market. I mean, bigger buyer pool probably, but mm, yeah, maybe less efficient, maybe.
Yeah, no, I agree with that.
Mm.
I just kind of threw it up there. I was like, hey,
Okay.
like, maybe you're too small for a broker or an investment bank.
Mm.
You're definitely not growing fast enough for venture capital. You're definitely too small for private equity.
Mm.
Um, so I just really wanted to niche it. I
Mm.
wanted to, really niche it to, the perfect example would be a company recently that I know was acquired. They were doing 75K in revenue. They had some good enterprise deals. So it was B2B. They ended up selling for I think 4x of top line ARR, which
Cool.
was really all profit because there was
Mm.
just two people running it.
Mm-hmm.
And I think that's just kind of the sweet spot. There's really no good place to buy those types of businesses.
Yeah.
So rather than just starting a marketplace where it's like, hey, I do the same thing as like these brokers, except provide less information, that sort of stuff. I wanted to just kind of like create an area for startups that it may not make sense to use a broker. And if they do
Mm-hmm.
use a broker, they're going to be paying 10%. And so, um, and again, the audience on MicroAcquire is definitely, within that range.
Mm.
But, I'm probably going to expand it just because I've been seeing a lot more deal flow that's, doing 1 million a year, as high as 2 million a year.
Mm.
One came to me and they were doing 10 million a year, and I was like,
Wow.
you're like, did you see micro in front of the name? Like,
Yeah.
go find an investment bank. Like, you'll
Yeah.
you'll be much better off.
Sure.
So just to start, it was just like I see this as a need in the market, and just started it there. But I think I'm going to expand that in the next couple of
Makes
months.
sense. Yeah, I think there's so Empire Flippers. I think that's how they started. I actually bought my first acquisition was actually through them back in like 2014. About like a 50K site, so I know that thinking of how to buy a site. But they started off smaller as well, and I think eventually now I think their average size is like in that 7-figure range. So I think even though they're charging fees, I think you'll eventually move up is my guess. But,
Yeah, I think
yeah.
it's like anything. You start small, you learn, and
Yeah.
then you let the market kind of pull you in the direction that makes the most sense. And I'm still figuring that out to some extent.
Yeah. So I want to hear about your content marketing strategy. So you did that really well. You talked about that with business apps, with Spiff, and now you're publishing a lot of content. I see on Twitter, LinkedIn, on other guest posts. I want to learn a little bit more from you. I guess what's more important, is it the content you publish and just being kind of yourself, or where you publish it, or tell me a little bit how you set that up for yourself.
Yeah. So thanks for reading my tweets and LinkedIn posts, man. I mean, when I post stuff, what I've found is like, obviously, I think there's, a huge opportunity for people to build personal brands, tell their stories, and help other entrepreneurs or whoever you're selling to by just reading, the content that you're putting out. And I guess the way I think about it, it's pretty simple. It's just whenever I'm just kind of feeling something, like, maybe I just talk to someone, or maybe, I don't have like a list of like buffer posts ready to go. Like literally in the morning, I'll just be like, I'm just kind of feeling this right now. I'll just
Mm,
write it. And then if it gets a bunch of likes, cool. If it doesn't, I don't care.
mm,
So I don't have like a strategy. But I do like posting on Twitter. I do like posting on LinkedIn. It's a great way to connect with people. I've made a lot of interesting relationships and met some cool people.
mm,
Just letting people get to know you, because I think that's a big shift that we're seeing with just companies in general is people want to know the person running the company, their personality. Who are they? Are they an ethical person? You know, they're they're talking about building companies. Have they ever built a company? Like maybe this is someone you can learn from. So
mm.
um, big fan of storytelling, and I just do it for fun. When I think of just something that like, this seems like I just want to get it out. It's when I'll post something. But
Cool.
I've definitely noticed this though. I've recently became more active on Twitter.
Mm.
Way more entrepreneurs on Twitter than LinkedIn.
Yeah.
It's so weird. I don't know if
Really.
like sometimes I want to write something and say like, hey, you probably won't like this because it's about how to like start a company.
Mm-hmm.
Because maybe your boss will see it or something like that, and like it'll tip you off or whatever.
Yeah.
So LinkedIn, I have more of a tone that applies to like, company culture, scaling a team, for, businesses further along. And then Twitter, I like to post stuff for bootstrappers, people just getting started, that sort of stuff. I found that interesting.
That's a good point actually. I can see why I don't publish personally on my LinkedIn because I think there's like people who follow me from years ago. I don't want them knowing what's going on. But Twitter, yeah, it's just it'll disappear in a couple of days, right? So who cares on their feed?
Yeah.
Interestingly, that yeah, I didn't have a Twitter. The only reason I started Twitter was because of our podcast. I was like, hey, let's start this. I had it years ago, and then I stopped using it. But then because of that, I just commented on one of Nathan's posts, and then that led to being on that the show that we were on, and then kind of led to other things. So it's kind of cool how Twitter can be a little powerful there. But I had no idea, right?
People are raising like funds off Twitter. It's ridiculous. It's insane. It's
What?
amazing.
Really?
You know, so you
Okay.
never know like who you'll
Mm.
meet. I always get excited. Like I had the CEO of Zoom follow me, and I was like, no way.
Mm,
Like,
cool.
just like other people. So yeah, I love Twitter. I'm a big
Yeah.
fan.
Cool. Is there anywhere else you kind of looking to decide where you should publish your content or where you pick to publish, whether for MicroAcquire or for yourself, or is it just those two right now?
I read for Forbes, probably about once a month.
Okay.
I'm writing a book too. I don't know how that's gonna go.
Cool.
So I do write a lot. I've always just enjoyed writing. That was also a big strategy at Business Apps. I guess posted on every customer's blog. I reached out, was a publisher for Entrepreneur Magazine, TechCrunch, VentureBeat, Inc. Magazine, and all that's like hustle to us. Like here's like a bunch of good like content. Like
Mm,
can I? How do I be a guest publisher? So I enjoy writing, but yeah, I'm writing a book right now that
cool.
I've got like 50 pages through. I don't really know where it's going to fit in the book sphere, but
Cool.
my ride at Business Apps was just so interesting. I want to just document it, just so
Hmm.
before I forget it, I have it out on paper.
Sure. Yeah. Send it my way when it's done. We'll definitely promote it. Interesting. So, like Forbes, Entrepreneur, TechCrunch, is that just reaching out, building relationship, and just creating the content and keep sending new content ideas to them, or are you like actually writing it and then sending to all of them and seeing who wants to take it?
Yeah.
Mm-hmm.
So Forbes has a like tech council, business council. It's invite only. I don't know how they let me in or why, but I was super excited when Forbes reached out and said, "Hey, do you want to write for us?" I was like, "Sure." Entrepreneur Magazine, we had a partnership with them at Business Apps, and so they would syndicate a lot of the blog posts we post on Business Apps.
Mm-hmm.
And so that gave me a guest contributor account for them as well. TechCrunch is a little bit harder. You need to have a really good story. I wrote about how I moved my company from San Francisco to San Diego.
Mm-hmm.
This is probably a story for a whole nother time, but that was probably my 15 minutes of fame. Um, you know, I moved the company down to San Diego to focus more on, operational efficiency, profitability,
Mm-hmm.
because San Francisco is super expensive and blah blah
Really?
blah.
Mm-hmm.
But when I went to San Diego, I was on like 5 news channels, and like it was just like a bomb went off. And I wrote a follow up piece of how do you actually move a company. It was in the same state, but San Francisco to San Diego is a long way. So
Sure.
um, just having a really good story. I know that sounds very simple,
Mm.
but it's actually really hard at the same time. Like really understanding, and with TechCrunch too, there's a lot of talk around, people leaving San Francisco or San Francisco, and this was in 2016, and
Mm-hmm.
obviously this talk is accelerated today, but there is some talk around San Francisco kind of losing its luster, and I felt that as a bootstrap company surrounded by companies that have raised like $10 million, 20, with like less revenue than my company.
Mm-hmm.
And people would it just isn't the place for a bootstrap company. And I realized that. And so I wrote about it.
Mm.
And again, I think it just comes down to, having a good story to tell, and telling it from like a very unique perspective,
Mm,
and then just keep trying. I mean, there's
sure.
countless pitches that I made to TechCrunch. Like my pitch success rate to, let's say, TechCrunch is probably 1%. Like,
Oh wow. Okay.
yeah, just any product release,
Mm,
name it something cool, pitch it. You have an idea for a guest post, pitch it. So just
mm,
persistence, I guess you could say.
cool. So that's it's going to be interesting times to see what happens, right, with San Francisco, and how companies start shifting to other cities and building other, or even outside of the city, way remotely, right?
Yeah,
Uh,
I got a lot of friends moving out, moving to
mm,
Tahoe, moving to
Texas.
anywhere,
Yeah,
literally. So
yeah, yeah.
yeah, it'll be interesting to see, but I don't think anyone likes being in an apartment when you can't leave, paying an absorbent amount. So
Exactly.
it'll be interesting.
Sure, yeah. So with that kind of situation with COVID, obviously on the buyer and seller side, there's a lot of opportunities in the market. What are some of the challenges that you advise to them, and maybe they should be aware of, both from like a short term and long term pressure, right? Because some SaaS companies might be having like a decline in sales, maybe their churn rate is going up, and maybe they're feeling that pressure to just sell it. Are you telling them anything to, or are you just letting them kind of sink or swim kind of
Yeah, no, good
thing?
question. It depends on the business.
Mm,
I mean, the ones that are, getting a tailwind from COVID,
mm,
that could be a great time to continue growing the business or potentially exiting the business. Because I think businesses that are able to survive or grow in this new reality or whatever you want to call it
mm-hmm.
are going to be really valuable businesses. So, when I was selling business apps, like I was always told, a bird in the hand is worth more than two in the bush. So it's that constant sort of like, should you sell now or should you potentially, take a risk and, grow it? Like at business apps, I had offers to sell it, and then
Mm-hmm.
I waited like 2 years until my tail with my investment bank ended, and then I sold the company. But in that 2 years, like a lot of things could have gone wrong. Like the market
Sure.
could have changed. Like, that was a big risk. And
Sure.
looking back, I might have changed that. But so I'll tell founders how it is. I have no incentive. I'll say, hey, I think you have a great business. You should just keep going. Like you're missing
Mm,
X, Y, and Z. Happy to, set up a couple calls and walk you through how I think about growing the business. Um, but also, I'm seeing there's more activity, than you've been in this market longer than me, but just the appetite for acquiring SaaS companies has never been higher from what I'm seeing on my end.
mm,
I don't know what to attribute it to. I think maybe the stock market is just so high and everyone's just dying to get their money out of it and into an asset that, they understand a little bit more.
mm.
I'm not sure if you're feeling that way too, but I've definitely have seen that where like COVID started and then signups on MicroAcquire just started going through like the absolute roof, which was, I never want to benefit from, a situation like we're in, but the way the world has kind of shifted, and I don't know, it's been interesting to see, and I don't know what's really been causing it.
I think as a partial side to that, I'm gonna say, coming from Ryan Culp. I don't know if you know Ryan.
I know,
He has
Ryan.
that, right. So his course, I've had a few people reach out to me and say, "Hey, I want to get into it." I went through his course, and they want some advice on how to buy companies. So it's interesting how that happens. I actually know Ryan too. He worked indirectly with us on a couple of deals at the previous firm as well. So it's kind of cool.
Nice.
Yeah.
Yeah, I think there's also just a lot of like, Ryan has done such a great job at, educating the market.
Exactly.
Nathan Lacka with Dealer Bus also kind of, educating the market. Like you
Hmm.
can buy a SaaS company and you don't have to necessarily be like a multi-millionaire. You can buy like a 500K SaaS company,
Exactly.
look to grow it. I think that concept for people is just mind blowing.
Hmm.
Um, so I think just more people are talking about it too as well, and that obviously increases, market interest and all that fun stuff.
Mm. So now with like this, post kind of COVID world, debt markets reopening, um, have you seen any change in like the number of deals for acquisitions and any trends, or is it just kind of keep growing from the last couple of months?
It's been growing pretty steadily.
Mm.
I mean, yeah, just kind of like
Yeah.
like it's definitely a full-time job at this
Cool.
point.
Cool.
Speaking with founders, speaking with buyers, figuring out, what they're looking for, what sellers or, what can they expect. So will it continue to accelerate for the reasons that we just talked about? I think so.
Mm, mm,
I hope so. I think it's awesome. Like
mm,
it's just so interesting when you think about the path that most entrepreneurs have been told, which is great idea, go find investors, build idea or product, go find more investors, when it's like there's so much risk along that when you can just kind of skip over that and just buy a product, apply, your skill sets. Maybe you're a former CRO or, VP of sales and you have like a little bit of technical chops.
yeah.
It's like this new form of entrepreneurship that I think is being, maybe democratized is the word a little bit.
Mm,
So I'd say it's going to continue, but I mean, time will tell.
sure. Yeah. So for the sellers out there that maybe have high expectations, what kind of valuations are you seeing on deals that are able to sell quickly and pick up buyers' interest?
Yeah, I'd love your thoughts on this, but for what I'm seeing, and again, I don't get like too close to the deal, so I'm not there all the way to the end. The way I
Mm-hmm.
hear about a deal going through is typically like, "Hey, can you take my profile off MicroAcquire? I sold it." I'm like, "All right, cool."
Mm,
Um, but typically, I see EBITDA, 3 to 5,
mm-hmm.
sometimes as high as 7 on the lower end of the company. So if it's a smaller company, I have seen that once.
Mm-hmm.
And then top line ARR 1 to 3.
Yeah.
But then there's outliers. There's like below and then higher.
Mm,
That's kind of the range that I've been seeing.
mm-hmm.
What are you seeing?
Yeah, that's typically what we're looking to pay. That 3.5 to 5 EBITDA, or you can say 2 to 3 ARR. I think a lot of that will just come down to growth rate. If they're flat, if they're declining, on the lower end, probably closer to like a 3, or if they're flatline. If they're growing, 20-30% year on year, higher end. And if they're growing, 70-80%, obviously they can demand a lot more, right? That probably get four,
Yeah,
five, 6x, right? So I
tons
think
of
that's
variable churn.
yeah,
How long have you been in business? How stable is the revenue?
yeah,
How many customers, market?
yeah.
A lot of variables.
Yeah, exactly. So I guess from your opinion, you have your own investment criteria too. I know you're looking at some deals. What do you consider examples of good companies that you consider high quality for your acquisition, and what makes them a good acquisition for you?
Yeah, so dude, I'm a rookie in this game compared to you.
Okay.
But I'm looking to acquire something doing between like 100K to 500K as like my first acquisition using my own
Hmm.
capital. I don't have a fund or anything like that. And the size range because I know what I don't know, and I've been on the sell side way more times than the buy side. So
Hmm.
I'm looking for a company that I can see myself 10xing.
Hmm.
Less of a financial buyer where the model is, hey, I'm going to hold this thing for 4 years and pay 5 times profits and then, maybe optimize a little bit. So I'm
Hmm.
looking for something that I can really get passionate behind. So that's kind of my criteria is, ideally B2B,
Hmm.
something that has a clear ICP or customer I can sell into, um, built by maybe a group of technical founders that didn't really build a good go-to-market strategy or a revenue engine or whatever you want to call it.
Hmm.
That's kind of what I'm looking for, and I'm being super picky and super patient, but
Hmm.
um, that's kind of where I'm looking at currently.
Cool. Yeah, there's I don't know if you follow like search fund, but essentially when you're ranking deals, it's always better to do a really good deal as your number one. Number two, not do a deal at all, and then number three is do a bad deal. So it's better to do not do anything than it is. People think you should be doing a lot of deals, but don't do anything. Then it's better than buying a crappy deal that you're stuck with, right?
Yeah,
Yeah,
especially
yeah,
for my first one, and then I'm like, I never want to do this again because
yeah,
like when I think like a few years down the line, I'd love to have like a few, not like a mega portfolio, but just ones that maybe have like some cross sell opportunities and stuff like that, like a small roll up. but yeah, if I bomb the first one, I'm gonna be like, this isn't
I'm
for
out.
me, man.
Yeah,
Yeah.
yeah. It's
So
interesting because yeah, I remember my first site I bought. Like I said, it was about 50K. It was a smaller site. It was doing like 2-3 grand a month. And then the only difference, what everybody says is it's actually better to go bigger because it's the same amount of work and energy and mind share it's going to take you to work on a bigger deal than like a smaller deal. But I think it's really just like internal confidence level. And I think the only way I got it was through the experience of doing like 10, 12 deals on the buyer side with that firm. These were like $1 million, $2 million deals, and I got to manage and play with it. And then even now, people ask, why aren't you doing 5 million plus? And I always think about it that it could be interesting. Obviously there's more stability, there's more cash to play with. You can build a bigger team, but then at the same time, it's like I just haven't done it, and I just don't know what I don't know. Just like you said, right?
yeah.
Yeah.
Well, you're like a year ahead of me or two, man. So, or even more than that. So,
Yeah.
dude, you're doing something right. That's for sure.
We'll see. We'll see. Just hopefully we don't get one of those crappy deals, but it's part of the game. Cool.
Hopefully, it's not for me, man.
No, no, don't send me those. um,
I'll keep that away.
what are you most excited about for the remainder of the year, and like what changes can we expect to see with MicroAcquire on your development roadmap?
Yeah. End of the year. Um, I've been on this like sprint with SaaS companies for since I basically got out of college. So I'm kind of like, just letting this one take me where it goes. I'm just having a ton of fun just talking with cool people like you, dude, or
Mm,
entrepreneurs, like helping them figure out like, does it make sense to go to market, or how can I grow my company if I don't? So, over the next year, I'm just gonna have fun.
mm,
That's my main goal. And if I come across something interesting, maybe I'll make a bid on that, and who knows. So
cool.
I, I don't have an answer to that question, a concrete. My goals right here on here, which I'm failing at, which is
Uh,
read one book every week,
okay.
work out every day, and I'm
Mhm.
failing at both those things. There's a few others, so mostly just kind of like enjoying life for a little bit. And MicroAcquire is really helping me do that, so I like that. In terms of like what I'm adding to MicroAcquire, I'm adding just more verification, like
Mm,
search traffic. I'm gonna have a Google Analytics integration completed by next week. We're adding Profitwell, upgrading our own internal Stripe analytics. Um, Probably getting a little bit more diligent on the deals that are going on there. So less deals, but higher quality, because I don't want to be the next flip up where there's just a bunch of junk in there. And then maybe even having like a verified trusted buyer.
mm.
Because sometimes when sellers list, they get like 50 requests and they have to kind of like go through and like figure out who's legitimate, who's not. Um, but mostly just all of this is from just user feedback. So I'll just continue listening to the users and just keep working on it, man.
Sure, man. Just have fun. Take it day by day. That's a nice story. We're
Yeah,
actually interviewing the Profitwell founder, what's his name, Patrick Campbell, next week. So that'll be
Patrick.
interesting. Yeah. Do you have any questions for him, or do you guys chat over?
I've met him a few times. I got a proper well hat like right over
Nice.
here.
Cool.
Um, and then Eddie from Big Commerce introed me last week um, to work on the integration. So
Cool.
maybe just tell him I said what up. I
Sure,
doubt he
sure.
remembers me, but
Yeah.
I'm a huge fan of what he's doing, and his product
Yeah.
is awesome. So that'll be a cool
Big.
conversation.
Yeah, yeah, I love Profitwell. Last question. This was really fun, by the way. I enjoyed this. How can our audience get in touch with you and learn more about what you're working on? I know you're on Twitter, LinkedIn.
Yeah, you can add me on LinkedIn, Andrew Gazdecki, if you can figure out how to spell my last name. Or we got the Zoom recording, right?
I think we'll get it right on our podcast here.
Yeah, so just LinkedIn, Twitter, microacquire.com, or you can just shoot me an email, Andrew at microacquire.com. I actually will respond. Yeah, multiple
Cool.
ways.
Awesome, man. Thank you so much for this. I really appreciate it. It was good.
Yeah, Akeel, this was fun. Again, big fan of what you guys are doing, and dude, just keep kicking ass, man.
Thank you. Thank you. Appreciate it.